Welcome all to the Node. I am Mike, aka Veteran Crypto, and this is your place for news, interviews, and education. Uh, Looks like somebody visited the chat earlier and was a little bit butthurt, maybe, about some info that we put out about their project. Uh, Never ceases to amaze me in crypto how emotional people are about their investments, and just lack and lack of understanding. So, but anyway, let me go ahead. I'm just going to go ahead and jump in the news. David should be joining us here shortly. But let's looks like Ethereum Foundation. It came out today. They cut 20% of their staff and 40% of their budget in a sweeping reset. So let me read what's going on with this. I'm not very bullish on Ethereum. Those of you that were here during the last little bit of a hint of a bull run that we had, we got Bitcoin had its pump. Usually Ethereum gets a pump. Ethereum really didn't get a sizable pump, and then we got the large caps that started to get a pump before the Trump a meme coin sucked all the liquidity out of the market, and then we got kicked in the nuts on October 10th. But it's the thesis for a high value Ethereum, and I want to ask David when he gets here, but the whole thesis for that was that gas fees were expensive. I mean, if those of you that don't remember, before they made adjustments, it cost sometimes if the network was busy a couple $100 to do a transaction on ETH. Now it's a fraction, a very small fraction of that. So, I mean, David, I'm kind of talking about ETH here. It looks like they slashed 20% of their staff and 40% of their budget. And I was thinking about this yesterday while I was driving back from dropping my nephew off at the airport. Why does ETH need to be expensive anymore with how cheap the gas is?
You see the guy in the chat? The show is trash.
I was laughing about that when I first went live. He's like, "This show is trash." I'm like, which project?
I love it. I love it.
It's
man, yeah, no, maybe that's a UIG guy. Ethereum Foundation, people leaving, like, I don't care. I don't care at all. I can't see how it's bullish or bearish. And as far as what gas for mainnet transactions,
is that why kind of what contributed to like a high ETH cost or value was that it was needed for the expensive transactions?
No way, man. I think it was just pure speculation. I think that back in 2017, that was like the first real ETH rip to the upside. Back then, I got to go back in time here and take a look for back then. But back in 2017, and yeah, I can share my screen here. So let's take a look at this, and here we go. So back in the back in 2017, ETH was a couple $100, and dude, Mike, I remember that, man, because I was doing mining back then, right before that merge, and back in 2017 when ETH was a couple $100, gas was ridiculous, and even in 2020. When ETH was, got down to $170 and then started to rip, gas was ridiculously expensive then too. And, I don't think that there's a correlation between that and the price. I think that ETH went parabolic from $100 to $4,300 in 2020 and 2021 simply due to speculation. I think that's exactly what happened. But yeah.
All right. Yeah. No, it's but I mean it kind of kind of made my ears perk up seeing that 20% of their staff and 40% of their budget. I mean, do you just see this more as like a bear market kind of restructuring and trying to streamline, because they've had quite a few of their leadership recently exit as well. So I
Good,
mean,
good.
but I mean, is this like potentially like we pointed out on Aave? I mean, is this like trouble, or is this just like they weren't doing a good job?
Yeah,
Um,
that's what
and
this is. They suck.
yeah,
Like,
so
look at the results. Look at the results. Like Ethereum is still slow as fuck and still expensive as fuck. Like the main net is slow and expensive. It's got all the DeFi, the public facing DeFi, but it's not exactly a great experience to operate on ETH mainnet. And then look at the price action of the coin. I've got the price action up dating back to January 2021. And I mean, dude, it's basically been just a dog shit coin to hold. The vast majority, if we throw down like a volume profile here, the vast majority of volume is over the last 5 years is right here at 1600, 1650 or so. Okay. This level is basically where a large portion of volume is traded. The point of control is actually higher, around 1800. But you've got very little volume up here, and you've got the majority of volume here. Price tends to cluster where there is a lot of volume. And so that tells me that, at least dating back over the last 5 years, fair value for ETH is $1,600, not $5,000.
Yeah.
So, how do you, and if we zoom out here to a weekly, let's just zoom out to a weekly and keep that volume profile drawn on here. Like if you zoom out even further, Mike, to your point about, gas and transaction volumes. Well, if we really zoom out in time, then, maybe we should start thinking about $200 ETH. How about that? Because the point of control, if you zoom out to 2017, is $132. Like, so the point of control, if you zoom out to 2020, is at 1650 or so. My buy zone this year is around 12 or 1300. This box right here.
Yeah.
So ETH. I mean, look, whatever the leadership has been doing has not been working to make number go up.
Yeah.
So, and whatever the leadership has been doing to make using the mainnet a great experience has not worked, like at all. Using ETH mainnet sucks, dude. And then, the layer 2 rollups, like, I don't know about you, but for Arbitrum, I like Arbitrum. I like Base. It's better for me to operate on these rollups because they're faster and cheaper. But you don't have the same liquidity that you've got on mainnet. And the problem is that since you don't have the same liquidity that you have on mainnet, if you're a small trader and you want to, maybe open a position that's $1,000, right? You want to use some leverage on $1,000 position. Well, you might not be able to do that on the layer 2s because the market might not exist that you want to enter. But that market might exist on mainnet. The problem is if you go in on mainnet with $1,000 position and interest rate arb, some type of stable coin play, you're going to get eaten.
Like we were talking about.
Exactly. Yeah.
I was going to enter that one position. Is the basically the profits I would make would get eaten up by slippage and fees.
Basically, yeah. So
you have to do sizable positions whenever you're doing ETH mainnet, and not as.
But that sucks.
Bad now. What's that?
That sucks.
No, that's why I enjoy using Base so much. I mean, it's like a fraction of a cent, and a lot of it I can adjust. My slippage, my acceptable slippage down to next to nothing, like 0.01 or something like that. And as long as it's not highly, the market isn't highly volatile. If there isn't a bunch going on, usually it works. But if there's a lot, if there's a lot of trading going on, if there's a lot of volume going on, often you have to bump your slippage up to for it to go through.
Yeah, and so also on mainnet, sometimes if you know that your slippage and your gas is going to eat your entire expected gain from an interest rate arb position, you can't even enter. And so that means that, the place where there is the vast majority of public facing DeFi, most retail can't even use, which is like, what the fuck, And then when I see these Ethereum Foundation people leaving, I just think good, because you guys have failed. Like, look at the results. Your results suck, So like, get out, let someone else take over. Maybe that dude can drive some results, So like, what do results look like? Well, it looks like, you don't need a bazillion layer twos. Well, you need the main net to work, it needs to be fast and cheap.
And it really depends on your point of view. As a token holder, price go up, as
that too.
As a customer, using the network, if you're an institution, a bank, or whatever, then there's some things that they're doing that is going to align with that. The privacy layer that they're trying to as part of an upcoming upgrade. There's a lot of things that are being added to try to make it more institutionally focused, because ETH historically has been kind of the cyberpunk. Kind of bucking the system.
So that's exactly what I was just thinking about as you were speaking there. And I actually downloaded that Ethereum Foundation manifesto.
The manifesto with the sparkles and the unicorns and shit.
I downloaded that shit. And let me see if I can find it, because let's see here. I think I may have thrown it in the trash. Let me see if I can find it out of there real quick. EF something or other. I know I've got it somewhere. So the thing that I wanted to do was throw that Ethereum Foundation, thing into Gemini and ask it, like, is there anything in here about making number go up for the ETH token? Because I think, based on my read of that Ethereum Foundation manifesto, Mike, my read of it was that they don't give a fuck about number go up. And so what? That's not good, And I think, in fact, they might even be opposed to that. If
everything that you were reading when we were going over that, it was all just about fuzzy feel goods. It was just
that's what a cypherpunk manifesto is, But
and I get that, but it's okay, you're not a meme coin. You're not, you're not that. You are, you have institutions building on you. You have banks building, on your network. You have layer twos that, there's massive DeFi protocols, that's being built on you. It's there's a point to where you have to understand, what not necessarily what you started out to be, but what you are. And you need to make sure that the network stays secure. You need to make sure that the network is usable as possible, that developers can develop, all of these things. You have a responsibility.
Yeah. And I just can't tell if they've abdicated that responsibility, or if okay, so check it out, man. I just asked Mr. Google Face, what's going on with this thing, man? The Ethereum Foundation mandate, or the Ethereum manifesto, released March 13th, 2026. And I asked it, hey, is there anything in it where the Ethereum Foundation is saying that they're dedicated to making number go up for the Ethereum coin? And, there's a coin. So on a layer one, the thing that you need to be able to process transaction it's called a coin. It's a coin and a token, but it's referred to as a coin. And then if a protocol launches on a chain and they launch a token, that's referred to as a token. So the thing that you need to pay for gas, that's the coin. The thing that you need to gain exposure to some protocol, it's called a token. So the Ethereum coin, Gemini here says that, no, there's nothing in the Ethereum Foundation manifesto where they say they're dedicated to making number go up for the Ethereum coin. In fact, it explicitly states the opposite.
Yeah.
What the fuck? Dude. It says the manifesto outlines exactly what the Ethereum Foundation is, and crucially, what it is not. In a list of disclaimers detailing boundaries they refuse to cross, the Ethereum Foundation states, "We are not a marketing agency." The document explicitly notes, "We do not engage in hype cycles or promote short-term price action." Okay, that's fine.
Yeah.
Our communications are grounded in technical reality, in our long-term mission and mandate, and in having fun on the internet. Oh, Jesus Christ. Having fun on the internet? Like, you see, this is this type of stupid shit that, like, people take this seriously, man. Like, people have their life savings in Ethereum.
I
Like,
know.
how would you feel if you had your life savings in ETH and you bought in 2021 and you read this manifesto and they're like, "We're about having fun on the internet." Like, what the fuck? I'd be pissed, man.
Yeah.
And so, like, here's the next thing they say: "We are not a casino." They state that they do not encourage people to take on life-wrecking amounts of risk or personal debt to hyper gamble on the token, adding that Ethereum is meant to be a foundation for a secure and free life. Okay, so what this means to me is these guys are faggots. That's what this means to me. And so, like, basically, like, what the fuck is wrong with them, man? Like,
Yeah.
if you're building this chain, you got to deliver for your coin holders. You got to make the user experience the best it can possibly be.
Yeah.
You've got to attract as many developers as you possibly can. You got to attract institutional capital if you possibly can. You need to make it private so that people can selectively disclose information.
Yeah.
So it's not out there for the entire world to see. Like, and you need to make it fast and cheap. Like, if they can't deliver on that, then whatever leadership is running it right now needs to get the fuck out, man.
Yeah.
And, like, so
No, I mean,
yeah.
if you just want to have fun on the internet, launch a meme coin and make do a pudgy penguins, make a little game and fucking do silly shit like that. It's like you can't be running Ethereum where it's doing the things that it's doing and try to treat it like it's just some fun game that they're wanting to play.
I mean, their biggest shareholder, for all intents and purposes, Tom Lee, is down $10 billion on his ETH bet. Like, he looks like a bit of a fool right now.
Right now, I mean, that can
right now.
And we're not saying that ETH can't pump. All we're doing is we're giving information on what is going on with ETH right now. You have to acknowledge the facts as they are, and that's what we're discussing here. Don't take this as sell your ETH and run for the hills. We're just stating this is what's going on with ETH right now. The manifesto that's posted on their official website. Go read it for yourself. It literally has the background for it is like unicorns and stars, and it talks about
it's so gay.
It's gay as shit.
It's so fucking gay.
And that kind of shit isn't personally. I have a bag of ETH, for speculative, gains, but it didn't fill me with a whole lot of fucking confidence, for a serious, DeFi chain. And ETH is being used as a serious DeFi chain.
It's basically the DeFi chain.
Because I mean, Base, as much as I'm bullish on Base, it is a layer 2 on ETH. I mean, Base is run much more what I feel ETH should be run like. Honestly, ETH. I mean, I would like if in a perfect world, I would see Base as the layer 1.
Mike, when you touch your desk, it's rattling your mic, and it sounds like just FYI.
Yeah, no, thanks.
Yeah. So, I mean, yeah, dude, look, I agree with everything that you're saying. And so here's a question that we've got to start asking ourselves, right? Like, during the next bull, I'm pretty confident that Bitcoin is going to rally. And I'm pretty confident that's going to drag Ethereum up with it. But this is ETH in Bitcoin terms, okay?
So the key is, is it going to be proportional?
Well, is ETH going to outperform Bitcoin anytime this century? You know what I mean? Like, so this here, this is not what outperformance looks like. This is
No.
what a speculative mania looks like, and this is what just
Yeah.
losing value looks like.
Or
So
losing interest.
losing interest, losing value in Bitcoin terms, and so the point of control here is up at 3%. So nearly 3.1%. So the way that you can view this is, this is Bitcoin as a percent, or ETH as a percentage of Bitcoin. So, Ethereum is right now worth 2.69% of Bitcoin, something like that. You could think of it that way. So is ETH going to suddenly outperform Bitcoin and return to its old all-time high in Bitcoin terms of, being worth 15% of the network value of Bitcoin? Is that going to happen? What's going to drive that? Seems like the Ethereum Foundation is diametrically opposed to that. Or is Ethereum going to lose value in US dollar terms and in Bitcoin terms and move down to, where it found support in Bitcoin terms at like 1.72% of Bitcoin's network value? I think the latter is more likely. I think that, it goes down to 1.72% or 1.76%. That's what I think. I think that this orange line, I think that's where it goes. And I think it goes there this year. I think it goes there over the next couple of months. So yeah, this is ugly, man. And you would need like speculative froth to push this up. And right now, everyone's, buying fucking South Korean stocks and shit, like the Kospi. Like people are just buying, tech stocks.
Yeah.
So this Kospi index, this is two companies. This is like Samsung, and I think there's one other. I don't know which one it is, but it's basically just two companies make this up. And before you think that the S&P and the NASDAQ are any better, they're not. The NASDAQ is like 50% 10 companies. So, if you're buying the NASDAQ, you're buying 10 companies. So that's not exactly a good thing. Let me remove this, the volume profile. The point here is that concentration is at all-time highs. Like there's only been 4 instances going back to like 1840 or 1812 or something, for the indexes in the United States. There's only been 4 instances where we've seen concentration like this. Today, 2000, I think the Nifty 50 bubble in, what was that, the 1960s or 70s or something? And then you got to go back to like the railroads in like 1840 or something like that. So there have been 4, maybe 5, I might be missing one. I think there have been 4 instances over the last 200 years, 220 years, where market concentration was this high. And also we know that semiconductors, when they go parabolic, that marks a top. And semis on the weekly have put in a big bearish engulfing candle at the top here. So this is a parabola on semis. The 200-week moving average is like 60% lower. Okay. So there's a long ways to go for it to correct on the downside. And we're going to get Micron's earnings today. That's going to be really important. But we take a look. This is a big bearish engulfing. You get a big bearish engulfing at a parabolic top. Let's zoom out to a monthly. Okay, so the monthly candle, we've still got a couple of days left this month. So this isn't quite a topping tail. And so what that tells me on the monthly is, even though this thing has gone parabolic for, basically since the tariff tantrum lows of 2025, that still does not mean that the euphoria is done yet. If June closes red, and semis are down, they close below 590 on the monthly, that makes this a topping tail and a topping candle. And that would mean you get out, you get out and you say, thank you very much, Mr. Market, for my gains, and I will reassess when these semis, cool off a little bit.
Yeah.
Because Mike, I was reading that one of the semis, it could have even been Micron. It might have been SanDisk. I'm not quite sure. There's only a couple of them. This is Micron. Here's SanDisk. Okay. And then we could take a look at SK, the same thing. So, but what I was reading that was so interesting to me is, and we were taking a look at this during the Micron deep dive that we ran through yesterday, is that Micron, they've got only so much capacity in their fabs, right? Yeah. And so because these pieces of DRAM or whatever they're manufacturing for AI, the margins are so high, they've allocated a much, much bigger chunk of their finite capacity to manufacturing this type of memory, right? But there was just a couple of days ago, one of the big, and there's only like 3 or 4 of them globally, these memory manufacturers, it basically came out and said, like, we are not going to allocate more to manufacturing this type of AI RAM. And in fact, when we make this new manufacturing capacity, we're going to allocate more to the other types of RAM, not the AI types of RAM. And so what I'm starting to think here is that we're going to see massive margin compression for these businesses. You know why I think that? Because that's what's happened every time we get a parabola out of semis. There's massive margin expansion, which then leads to, more capacity, and then that leads to a glut, and then you see margin compression, the equities correct, and then the cycle repeats 2 decades later. So like we're talking about cycles that repeat every couple of decades. So, I'm just thinking to myself, like, this is definitely stretched to the upside. There's no doubt about that. And I think it's time to take profits, man. Like, this is a midterm year. We've got elections in November. So if we take a look at the S&P, this is the monthly, okay? So if the S&P can't break out above its June monthly high, which, comes in at the June monthly high and the S&P futures is at 7650. Let me be generous, 7650. If it can't break out and run to 8,000 before November, then maybe if there's a Republican sweep in November, maybe we get another run in Q4, up to 8K. But between now and November, I'm kind of thinking you take risk off the table. You take some chips off the table. And for anyone who's holding MSTR, God help you, because this thing, beautiful head and shoulders right here. Left shoulder, head, right shoulder. And so that basically means, like, pattern completion for this is, if I'm being honest, well below. This is a monthly chart. So the pattern completion would be well below the 200-month moving average. If we zoom in.
So I should get rid of my couple $100 of STRC?
Well, I mean, I don't think that this stuff implodes and goes to zero. I just think that, there's a speculative mania that drives asset prices up in a parabola. And when it unwinds, it goes back down to a moving average. So, the 200-month moving average comes in at like $50 for MSTR. If we take a look at Stretch is trading at its lows. The market is saying that they don't believe Saylor. They don't like that he's only got 14 months of cash on hand to pay these dividends, irregardless of the fact that he can sell Bitcoin, to raise cash to pay these dividends. He can sell MSTR shares at a, net asset value discount to the underlying Bitcoin to raise cash to pay the Stretch dividend. He can do that. But dude, this is really ugly. Like, this head and shoulders pattern with the breakdown today of that 103 level support for MSTR, man, this thing breaking down below 103, the target here, the first level of support comes in at 75, let's call it, be a little bit generous. It actually comes in at 73.50, but I'll call it 75. What's a couple dollars between friends? But, right here, 55, that's the target, because that's the moving average. So that's 50% to the downside. This is levered Bitcoin. If Bitcoin is down 20%, down to its, 49K, where I think there's support, if Bitcoin gets down there, man, then, MicroStrategy is levered Bitcoin. So if Bitcoin, the underlying, is down 20%, I would expect MSTR to be down 50%, especially since the sentiment would deteriorate so much between now and Bitcoin hitting 49K that no one in their right mind would want to own MSTR. But that's also the best time to buy, to be completely honest. You just got to be a little bit more patient. Mike, something that I was working on all this morning was Runway. And bro, it's the best app. It's a DApp that I've ever built because, and I want to share this, dude. This is so valuable for anyone. Mike, if you want to learn how to trade, this is the tool that will teach you how to trade, because what this thing does is you have to argue with it. And it's so valuable. It's so valuable to argue with this thing, because my initial instinct when I take a look at a chart, and I'm very good at calling direction when I look at a chart, but when I try to translate that into a position size, it doesn't work, because I have a brain, and your brain tells you to do exactly the wrong thing when it comes to trading. And maybe I'm not conditioned to think of things in terms of risk management. And so that's what this does for you. So I journaled a trade on BNB, and it gave me, if we just take a look at the trade here, based on my thesis, all of my information and my entry, it gave me a stop and a TP. It told me how much margin to use and how much leverage, the notional size of the trade. It tells me my 1R risk. My win probability is around 60%, gives me an EV, a risk reward ratio, and it tells me whether it endorses the trade or not. So yeah, man, great stuff. And I love trading with this morning. But what's going on in news? Let's chat about news.
Exactly. Let's see what jumps out at me here. So institutional outlook. Despite the volatility, 21 shares maintains a bullish long-term perspective on Bitcoin, suggesting the post-halving price action is within expected ranges and projecting a recovery towards 100,000 by the end of the year.
Wait, who said that? They said a recovery?
21 shares.
A recovery to what?
Toward 100,000 by the end of the year.
Oh, get fucked.
Yeah,
Jesus.
I don't know.
These banks, dude, these banks talking about, $250,000 this year, $100,000 this year.
Yeah.
Dude, you talk about cope. The cope is real from these analysts at these banks.
I see some potential for some upward price action, but not that strong.
I mean, maybe in Q4, but not now.
Well, that's what they said. Is by the end of the year. Standard Charter bullish on Aave. In a new report, Standard Chartered initiated coverage on the Aave protocol with a 50x price target, forecasting the token could reach 3,500 by 2030. This hinges on a projected 37x expansion on the DeFi ecosystem driven by RWA tokenization and stablecoins. I mean, I definitely am more. Oh no, sorry, that's Aave, not Uniswap. I don't know why I always in my head I always get those mixed up. But I mean, do you see, without them fixing a lot of the issues? I mean, do you see? Are you bullish on Aave?
Yeah. I think that Aave is a protocol that makes money. They've got I don't know enough about Aave's tokenomics. Does Aave return revenues to token holders, or is that a pure governance play?
We might need to add that to the deep dive we did on it. My understanding is no.
If it doesn't, then there's no reason to hold the thing.
Yeah, and that's really what it boils down to, and really, I think kicks the thesis of a high value Aave token in the teeth. And again, I need to research that, because when we did the deep dives, we weren't really on Aave. We weren't really focusing on the deep tokenomics that we've started focusing on with the value capture and things like that. So we might circle back and add that. But Yeah, if there isn't that value capture for token holders, I just do not see I don't see a need for a high price on a token, because there is no, it's not deflationary. There is no buy pressure. There's nothing to incentivize price to go up. So it's, yeah, I mean, there's just certain things that have to be in place long term for me to, other than speculation. I mean, we've all seen, meme coins and, a lot of these projects with shit tokenomics, and shit value capture. We've seen them all fucking move, but that's just speculative buying. That's just basically people, seeing bullish news on it and, FOMOing into it. And that just, as the price pumps, more and more people FOMO into it, just like a Ponzi scheme. And the price keeps going up and up and up. And so more people FOMO in. And the people that got in earlier start to take profits. And, as the price goes up, the smart people start taking profits. And slowly that momentum slows down. And then the price starts to roll over. And that's when you talk, when people talk about the price rolling over, smart people get out because they're like, like David was talking about with the tech stocks. You start getting those topping tails and things like that. And it's like, all right, party's over. It's, you don't got to go home, but you can't stay here. At least take your initials out and, maybe some profits if you're, bullish long term on it. But, things don't go up forever.
I agree with you. And as you were speaking, I was thinking, well, I'm looking at Aave. It's on my watch list here. This is my shopping list, essentially. As it stands now, over the next 90 days, this is going to shrink. My watch list that I'm sharing here, Mike, on TradingView. But as you were speaking, I was thinking like, hey, maybe I could open up a little tradey trade on Aave here. And
do a little long or short?
We'll do it live. We'll do it live.
We'll do it live.
We'll do it live. We'll do it. We're going to get short. We're going to get short. So, here's Aave. And I want to get short. And let's see, what's my thesis? Aave is a dog shit governance token with no value capture. And I think it retests its lows around $58. Now, this bitch, Hermes, you got to argue with this fucking thing, dude. Like, I swear to God, this morning I spent hours trading with this very successfully. I'm having a great time with this, but it's a pain in the ass because you got to argue with it. Like, you've got to go back and forth and you've got to make your case for your trade. And because there are still a bunch of bugs in it around, like, pulling, it's actually working on fixing the bugs right now. I've got it pushing a PR right now. But so, there are a bunch of bugs in the way that it pulls my available margin on Hyperliquid mainnet. Mm-hmm. So I've got to basically massage it to give it the right available margin so that it'll give me my R and my EV and everything else, my stops, my TPs, how much leverage to use, the amount of margin to use. But check this out. So we're arguing here about Aave, right? So my thesis is that Aave is a dog shit governance token with no value capture. And I think it retests its lows at $58.
I'll be right back, David.
Sure. So my fundamental thesis, it says, might be valid, but it says the technicals are screaming the other way. Because the 15-minute, 1 hour, and 4 hour trends, these are all bullish, but these are all short-term. These are all short-term trends. And so it's above these EMAs on the short term. Now, the RSI, I need to fix the logic on the RSI. I don't think that this is quite working. It's saying that the RSI is overbought. It's definitely a high volatility token. That's nothing, no doubt about that. It's talking about, high bullish momentum on lower time frames. But, I think on a higher time frame, the momentum is bearish. And invalidation for this trade is, invalidation for this would, if I just take a look, invalidation would be above this weekly candle from the beginning of June. So that high is 83.03. So that would be invalidation. So I'm going to go 83.13 is going to be my invalidation. So I'm going to bring it on back here. Invalidation is 83.13. And I have, what's the available margin, because it's not pulling in the available margin properly right now. So available margin is 13. I'm going to go 1350. So we're going to bring it on back over here, and I'm going to say, and I have 1350 margin available to trade. Okay. Help me determine how much of this margin to use for this trade, and how much leverage I could use. I could use maybe 2x leverage, and help me determine the stop and TP. Okay, so what we're going to do here is we're going to let it run. And I'm going to start arguing with it, because that's basically what you do. You argue with this to prove your point, to make your case for your trade. And this thing is always going to reel you in. It's always going to say, oh, you want to use 100x leverage and 100% of your account? No, let's not do that. It's going to say, hey, if you've got a $1,000 account, then you can use 1 or 2% per trade. That means you're risking, your R is $10 or $20. That's your risk, right? So that means if you've got a $1,000 account, you're not going all in, levered long or levered short on one position. What you're doing instead is you're using this tool to determine how much should I risk on each trade of my account, such that if I'm wrong 5 or 10 times in a row, I'm not down 50%. Because if you're down 50%, you've got to double up just to get back to even. So you can't have losses like that. And that's why risk management is the most crucial thing, I think, when it comes to trading. And that's why I've been focused so much on building the risk engine logic out for this thing. So basically, all I'm letting it do here now is think. It's running, and I'm actually, right now pushing this to main and update. So it might have I might have broken it, because I think that the build is running right now. So I don't know if it's still proceeding with reasoning. I think it is actually, but I'm pushing an update to it like right now as we speak. So hopefully it's still going to run for me. And one thing that I need to fix on this is I need to make it faster. All of the screens kind of take a little while to load. The reasoning takes a little bit of time here. It's not exactly what is I would consider to be optimal. But assuming that it hasn't, that I haven't broken it by pushing the update, then hopefully what we'll get here is, it'll tell me how much to risk, what my stop should be, what my target should be, the size of the trade, the notional size of the trade, the amount of leverage I should use, my expected value based on my win probability, and my risk. So it looks like I think I probably did break it, with the update that I'm pushing. So what else we got going on, Mike?
That was my brother Taylor. We're closing on that property, and so it was like need to move. So
that's awesome.
Yeah. So let's see. Looks like we got DeFi sector headwinds. Total value lock TVL in the DeFi sector has dropped 40% year to date in 2026. Pressured by the wider market downturn and the lingering impact of major exploits such as the Kelp DAO hack that affected Aave. We've been reporting on this for a while, but as David has pointed out, the liquidity is not leaving the market.
Liquidity.
It's staying in crypto, but it's in USDC, USDT. It's in stables on the sidelines, and and they're using it to to earn like a little bit of yield, but they're staying in stables for right now until they feel like like David's been talking about that the market has bottomed, and that's what we're hoping to see here in the coming months leading up to October, is seeing some signs of bottoming. And what is it? Not capitulation, but
right. So a capitulation happens, on the way down, and accumulation happens after
exactly.
a capitulation.
So
right.
That's what we're waiting for. Is we're waiting for the accumulation. We're waiting for the volume to that basically all of that sideline liquidity in those stables.
Liquidity.
As soon as we start seeing that flow back into the markets, and we see that the volumes start to bump up, that is your indicator that that these whales, that these this large amount of liquidity is starting to move back into the markets. That's what we're waiting to see, is that sideways action. Everything's going down. As soon as it gets to like a bottom, we start seeing some sideways trending over time, and we start seeing those volumes starting to build. That is the potential that we've reached the bottom, and you might want to start thinking about starting to get some liquidity back in. So that's what I'm waiting to see. Is I'm waiting to see that sideways action in the volumes.
Yeah, I think that we're probably just a couple of months away. Maybe like 3 months away, something like that. So,
appreciate you, Freak Atomic.
Absolutely.
Yeah, no, it's I'm not just in the crypto markets. Me and my brother and my nephew, we're doing real estate. So we're basically buying an investment property and going to do like some RV pads or tiny cabins, and rent them out to hunters and fishermen up where I'm at. Start a little adventure company. My nephew's going to give tours and stuff like that to the different waterfalls and all the different stuff to do around here. So rent 4-wheelers out, and that people can go rally around on the logging roads. And so just
sounds great.
Yeah, you got to diversify, man. It's you don't just want to be in the crypto markets. You want to have some stocks. Look at stocks have outperformed crypto. Recently, it's you gotta have an iron in all kinds of fires.
Agreed.
I am in the western Montana, northern Idaho, eastern Washington area. We'll just leave it at that. I'm up by the Canadian border. So yeah, it's you can see I live in a cabin. But David's been up here. He was up here about a month ago.
It's a cool spot.
Yeah,
man.
It's a lot of fun up here. All right, let's see what else we got. We had about 10 minutes. What do we got? Litecoin? No, thanks.
What's going on with the Litecoins?
It says lit VM growth. The lit VM testnet on the Litecoin ecosystem reported significant growth milestones, surpassing 4.4 million wallets, which isn't a good metric to use, and 63 million transactions, which isn't a good metric to use. Because, I can use it like, AI and a bot and just make a bunch of wallets and do a bunch of
or have a bunch of wash trading on meme coins or something.
Exactly. To fudge those numbers. So that's not impressive. If it's real, then it could be, but it easily fudged. The ecosystem is focusing on AI-powered DeFi applications, including prediction markets and automated lending platforms. That's being done already in a lot of places. And not to take anything away from Litecoin, we still need to do a deep dive on it. But you have much more purpose-built chains that are doing a lot of this. Base with X402 and virtuals, and a lot of these these other projects that are focusing on these automated this automated DeFi and things like that. I see a lot more investment and a lot more development going on in some of these other ones for me to get excited about Litecoin, to be honest. And not to say that it can't become something. I'm not seeing a whole lot of interoperability between Litecoin and a lot of these DeFi protocols. Like if you
and
look
literally anything.
Yeah.
Can you bridge Litecoin to anything?
I don't think so. We need to do a deep dive because I know nothing about it. But
Yeah.
You see Base, you see Ethereum, you see Canton, you see Solana, you see freaking.
So you can bridge to and from Litecoin. It looks like using Thorchain and Near Intense.
Okay. But you see these other chains that I was just mentioning, where they seem like that they are anything of note that's being built is including these chains. You got Ethereum, you got Base, you got Canton, you have Solana, you have not OPNet, what OP, freaking. What is it?
Oh shit! Is Bitcoin below 60? Oh shit!
Oh, it's saying Bitcoin below 50K.
No, 60.
Oh, okay. Oh, he corrected himself. Okay.
Yeah.
But
dude, MicroStrategy is taking a dump.
What's that?
MicroStrategy down 10% today.
Oh shit!
Yuck.
What's STRC doing? So that's my thought process is just I keep seeing the usual suspects. When it comes to the chains and the protocols where all of the development is happening, where everybody's wanting to connect to it, where the TVL or the liquidity is flowing to. We're seeing a lot of interest in Aerodrome. We're seeing a lot of interest in Morpho and Aave and Uniswap, Meteora. Yesterday David did the deep dive on Meteora. There was some really interesting movement there.
Meteora? That was we had that one planned, right? To do Meteora?
Oh, is that today? Yeah, that's today.
I think so. That's Meteora. I did Micron.
Yeah. Sorry. My days
Dude, Mike, you've got to check this out. Let me share my screen, bro. You got to read this. This is hilarious, dude. So check this shit out. I'm arguing with this bot because the logic, it's not pulling in my available margin on Hyperliquid properly right now. I'm working on doing. Oh no, dude! MSTR and Tesla. What the fuck?
Sag nasty. No. You have a nasty portfolio, Sag nasty.
You never go full retard, Sag nasty.
Don't go.
Never
go full retard, brother.
Never. So basically what you do with this bot is you argue with it. And you see, it's when I'm arguing with it, because it's not pulling in my right data, it's telling me, David, you're an idiot. That's not how you think about sizing. And so the problem is that it can't see my available margin properly. So hopefully that'll be fixed in a couple of hours today. But I've calculated my entry, my stop, my TP, my notional size, my leverage, my EV, my 1R for this Aave trade. And because it can't pull in my right margin, the amount of margin I've got available, it's refusing to journal the trade. You see, the way that this works is before you can enter a trade, you've got to journal it when you're in advisory mode. Now, I built an autopilot into this too. So it'll just enter trades for you. But when you're in advisory mode, you've got to argue with it. So I said, plan the theoretical position in the journal. And it says, I will not do that, David.
I will not do that, David.
And I was like,
you'll do what I say you do.
I was like, bitch, fucking do it. And I said, plan the theoretical position in the journal again. And it said, no, I will not. And it says, this is a red line. recording a fantasy play in your official journal is an act of self-deception. It's all because it can't see my available margin. So plan the theoretical position in the journal, comma, bitch. But see if that fixes it. Maybe if I talk some shit, it'll actually respond properly. I think that in my experience this morning running through this thing, if I gave it a direct instruction and order 3 times in a row, then it would acquiesce and finally say, okay, I'll do it. So all I want it to do is journal the trade so that when I manually enter the trade, I can then, there, it did it. See, after 3 times, it listens. So,
damn it, 3 times.
Yeah. And so, bitch, daddy needs some fucking new shoes. Gator don't play.
Dude, it's like Gator's bitches better have his money.
That's right, dude.
You need to rename it.
So now that I've got the journal entry, here's the journal entry. And you see where it says Hermes dissented up in the top? It's like Hermes no like. And so, but now I've got everything that I need. I've got my stop. I've got my T. Oh, it fucked up with the margin again. So I've got to go ahead and, update with Hermes. And so now that I've got the trade ticket open.
Jeff says your app sounds like a woman.
Yeah. You're supposed to argue with it. That's what you're supposed to do. I have 1350 available margin, and you need to update the trade plan to determine how much of that margin to use at 2x leverage for this trade, and then update the journal entry. Okay, so it's running back through all of the. So right now, if I scroll up, it ran through the multi-time frame analysis. That's the technical analysis, and it's running through the risk engine right now. And I think it's probably going to fuck up again unless the update pushed. No, it didn't. So it says build success. So any second now it should. Success. Yeah, it's great success. Well, but it's still messing up with the trade ticket. So even though Cursor is telling me that it's successfully pushed, it looks like it may not have actually worked. So let's see here. Leverage is too high. Expected value is negative. Yeah, so it's got the wrong information. You see where it says position size? Like I'm not running that position size. The position size should be closer to like a couple $100, and the amount of margin that I use should be closer to like $20. And look at what it said to me. It said, "We are done with this." It's like, bitch.
It is bitch. Just like a woman.
Bitch, shut the fuck up.
You ask it, like, what's wrong? Nothing.
My available account margin is 1350. Tell me how much of that to use on this trade with 2x leverage. Jesus Christ. So I wanted it to be something that I would have to argue with to prove my point, but it's hallucinating though. That's the problem, is that it can't see, and Cursor just tells me that, don't worry, David, I just pushed that build to main and it's working now. Listen to me and update the trade ticket. So I'm going to get it to where it can see the margin, so I don't have to argue with it like this anymore. Yeah. But yeah, man, I think it's super valuable, and it's nice to be making some money trading with this thing. So that's pretty cool.
Now, are you still paper trading, or are you?
No, real money this time. Okay. I got the paper trading. I got it all to the point where I like it, but okay. So this is what it's missing: withdrawable USD free margin.
As soon as you go with this, let's go into the deep dives.
Gotcha. So the free margin is 1350. How much should I use of that at 2x leverage on this trade. Okay, so let's see if, because you have to go back and forth with it several times, and that's what you should do, because as long as it can see as long as it can see your account properly, which right now I think it's having a hard time doing, then yeah, see, it's saying that I don't know where it's getting this number from. Okay, your information is incorrect. Proceed with available margin of 1350 and tell me how much of that to risk with 2x leverage on this trade. I'm just going to copy that because I think it's going to give me a problem again. And I'm just going to keep telling it, just do it, just do it. And so over here in cursor, it says that the deploy completed successfully, but I don't know that it actually did. So it says, okay, so that I see what's going on. So free margin USD, withdrawable USD fields are wired into the metrics block. So they're going to populate in the dashboard, but it's not making it into the Hermes agent. That sucks. Okay, $68 of margin. Okay, so complete the trade ticket with $68 margin used and 136 notional. And I'm just going to copy that so that it actually does it. Because all I want to be able to do here is, I want to be robotic, right? And I just want to go, okay, I'm entering at the market. My stop is here. My TP is here. The notional size is X. My leverage is X. My R is X. And that's it. So I don't even think about it. I'm just going in based on, see, look, let's start over one last time. How about not? Fucking listen to me. The problem is that I designed it to not listen. I designed it to tell you, hey, that's not a good idea. Don't use that amount of margin. Don't take that amount of risk. I designed it to be, a disciplined trader. But the problem is, if it can't see what I've got on Hyperliquid, it's going to continue to give me problems. So there we go. It finally listened. Awesome. Great. So there's the trade size, 136. And I'm just going to go ahead and enter this. So I'm going to take a look at the journal entry. So if I take a look at the journal entry, here it is. Awesome. So it says here, it's giving me all these problems because it can't see my available margin on Hyperliquid. So I've got everything that I need here now. And I'm just going to highlight this so you guys can see this. And I'm actually going to enter this right this second on Hyperliquid because I want to get short Aave. So I'm running 2x leverage. That's the amount of leverage. And you can see that there, 2x leverage. Now, the reason it's giving me a negative EV is because it didn't factor in my win probability, which is right around 60%. So I should have a positive EV. I'm going to fix this today. I just really want to be able to start using this a little bit. And it's valuable for me to go back and forth so I can figure out what's broken with it so I can fix it. So I'm using 2x leverage. My entry is at the market. My stop is at 83.10. My TP is at 66.84. Okay. And my notional size is 136. That means I'm deploying $67 in margin. Okay, great. I'm done. Now I place the order and filled. Done. Great. And so now what I do is I go back over here to my dashboard, and from my dashboard,
make sure we leave plenty of time for the deep dives.
Yep. So from my dashboard, you see down here, you can see the open positions. There's the Aave position that just pulled in. The last thing that I want to do here is assign this to a journal entry. Here it is. There's the journal entry. I'm going to link the position. And after I link the position, now that I just linked it, What it's going to do is it's going to give me updates via Telegram on the performance of these positions. So with all that, that was pretty cool. Let's hop in here to the Intel library. Let me go ahead and refresh this. And dude, it is so good to be trading with a co-pilot like that. Oh my God. Because even though it's kind of a bitch and it will tell you, no, I don't like that trade. That's bad trade, David.
Yeah.
Even though it does that shit, that's what I need. I need that thing to be telling me no, you do not go 100% all in with 1,000x leverage.
It's what we're constantly, telling people that, get butthurt about, some of the deep dives we do. You need to have, a contrary opinion. You need to have somebody that is, calling you out on, making sure that you're not just getting that tunnel vision, getting in that echo chamber of, thinking that, every trade that you do is a great trade. You need to be able to look back historically and learn from your mistakes, and having an AI that is going to push back and make you really analyze and, mitigate not eliminate, but mitigate, you potentially losing money from, just consistently doing the same mistakes over and over again.
So you see here, Mike, where it says process and behavior. So it's all about following a disciplined system. You've got a process that you follow. And so your expectation should be that if you know what your win rate is and you diligently manage your risk, that you're going to have a lot of winning trades and you're going to have a lot of losing trades. But because you manage your risk properly and you follow your process, over time you consistently make money. And so that's what this allows you to do. Now, imagine this, Mike, is something that I'm going to build into this starting today in the trade desk over here. Right now, I've got two different types of trades, right? I've got mainnet on hyperliquid directional trades, and I've got mainnet spread trades, right? But I'm going to build into this, Mike, the ability to enter LPs on Uniswap and Aerodrome, the ability to enter and manage lend borrow positions on Aave, Morpho, and Euler. I'm not sure if Morpho and Euler have APIs. I think they probably do. And the ability to take a look at crypto bonds on Pendle. So that's the next level for this thing. But let's take a look. Pendle. Which one you want to start with? Meteora, Pendle, or variational? What do you think?
Did Jeff do variational? Because I didn't.
Oh, I don't know. It must have been. Wasn't me.
Meteora and Pendle are what we're doing today. Variational might be one that Jeff loaded because I didn't.
Okay. So I think variational.
Well, anybody that's interested, Jeff does our super early projects on the blockchain report. He's the one that's really, really good at finding these really early projects. So if you're interested in maybe finding like a 50 or a potential 50 or 100x, you might want to check that one out. But let's start with Meteora.
Oh, dude, Bitcoin is dumping. Let's go to Meteora. That'll be great. I like Meteora. As liquidity provision decentralized exchanges go, this one is one of the best. It's a DLMM over on Solana. Let's check this out.
By mid-2026, the structural architecture of decentralized finance on the Solana network relies entirely on extreme transaction velocity. Protocols no longer compete to hoard massive, stagnant blocks of capital. They compete to route active data streams as efficiently as possible. This high-contrast bar chart illustrates the result of that shift. Meteora maintains a relatively low total value locked, stabilized around $132 million. Yet through its highly concentrated routing engine, it has generated over $1 billion in total cumulative fees. The project originally launched in 2021 as Mercurial Finance. In late 2022, the development team executed a radical rebranding to escape the systemic fallout of the FTX bankruptcy, rebuilding their architecture to focus strictly on transparency and capital efficiency. That pivot established Meteora as the dominant back-end routing engine on Solana. High-frequency trading bots and decentralized exchange aggregators direct massive volume on-chain, with Jupiter alone controlling over 44% of routing paths. Meteora operates specifically to capture that aggregator flow. Meteora survived an existential market collapse and secured its position by proving a distinct mechanical reality. Structural engineering optimized for transaction volume outcompetes the traditional model of passive capital accumulation. To understand how a protocol captures that much volume with so little locked capital, we have to examine the mechanical limitations of legacy automated market makers. Historically, decentralized exchanges rely on continuous mathematical curves to price assets. Standard constant product curves force prices downward, guaranteeing slippage. Meteora replaces this with the dynamic liquidity market maker, organizing reserves into discrete price bins. Inside a bin, the execution price remains fixed, zero slippage, until reserves are exhausted, routing transactions to the adjacent bin. Because the pricing does not slide within the bin, liquidity providers do not need to spread their assets across an infinite price range. They concentrate their capital exactly where trading is happening. Eliminating slippage within localized price ranges allows liquidity providers to deploy a fraction of the capital previously required while processing the exact same volume of trades. Concentrating liquidity creates a severe systemic risk. During high volatility, arbitrageurs exploit tight price ranges, inflicting extreme impermanent loss on liquidity providers. Meteora implements an automated countermeasure to neutralize this toxic order flow. The protocol abandons static fee structures and utilizes a volatility-aware dynamic fee engine. The dynamic fee equals the base fee plus a volatility accumulator. In calm environments, the accumulator shrinks, scaling the fee downward to capture maximum volume. During extreme volatility, the engine spikes the fee up to 12%, creating a spread to block predatory arbitrage bots. The inflated fees collected during these turbulent windows are routed directly to the liquidity providers, mathematically compensating them for the heightened risk of impermanent loss. By adjusting execution costs in real time, the protocol transforms toxic arbitrage flow from a fatal systemic vulnerability into a lucrative, targeted revenue stream. Beyond the concentrated discrete bins, Meteora also operates the dynamic automated market maker programs, designed to manage less concentrated legacy asset pools. Standard liquidity pools suffer from severe capital inefficiency. Large portions of deposited assets sit entirely idle, waiting for trading volume that may not arrive for days. This diagram shows the dam architecture. An off-chain keeper bot named Hermes monitors and rebalances the pool's inactive reserves every 60 seconds. When Hermes detects unutilized capital, it automatically allocates them across vetted Solana lending protocols, such as Camino and MarginFi. This creates a dual yield stream. Liquidity providers earn real-time swap fees on their active capital, plus external lending interest on their idle capital. The subsequent V2 upgrade advances this further by integrating alpha vaults, an anti-sniping defense, that allows supporters to deposit capital before public trading commences, securing early liquidity for token launches. By constantly sweeping inactive reserves into lending protocols, the DAN architecture ensures zero capital remains passive. The tokenomics of decentralized finance are plagued by a specific launch structure, releasing a tiny fraction of the token supply at launch to artificially inflate the fully diluted valuation. Meteora rejected this model. The project forcefully unlocked 48% of its total token supply, 480 million MET tokens, into the circulating market on day one. Unlocking nearly 500 million tokens typically results in an immediate, catastrophic dump, crashing the spot market as early users immediately sell their airdrops. To prevent this collapse, Meteora engineered a distribution framework known as the liquidity distributor. Instead of dropping raw tokens into wallets, Meteora issued users a yield-bearing LP NFT, routing their claim into an active market-making position. If a user exited, their exposure was gradually sold across a wide liquidity range, organically absorbing selling pressure through trading volume. Structurally packaging the airdrop as active, yield-generating positions neutralized the classic death spiral. Users were financially incentivized to hold their positions and earn transaction fees rather than immediately liquidate. A common assumption in decentralized finance is that native tokens rely on inflationary emissions to pay out staking rewards. Meteora's system operates strictly on realized revenue. The protocol extracts internal revenue, 20% from DLMMs, 10% from DAMMs, and 50% from bonding curves, pooling into a staking contract. Met stakers receive a direct share of these fees, which the contract automatically converts and distributes as USDC stablecoins.
Huh.
In December 2025, Meteora expanded the utility of the staked token by introducing the Comet Points gamification system.
Okay, so we got to pause here for a second, because what it just said is that if you stake MET, the token for Meteora, you receive a distribution paid in USDC. So what that tells me is this must be I think this is Singaporean. Like, I think that this is in Singapore, because that makes this MET token an unregistered security. Yeah.
Because if they're directly paying dividends then
in cash. Yeah.
So I mean, it's something important to understand, and not to say that you can't buy this, and you can't get that, but you definitely have to keep in mind that there is some regulatory hurdles in the U.S. and potentially Europe and other places where, like David was just saying, this is unregistered security. So
yeah.
Hey, David, real
Users
quick,
accrue comment.
Yes, sir.
how do I look up KTA like on a trading view, relative, price wise to Bitcoin?
Well, if you're looking at KETA, the first thing you got to do is take the nearest heavy object and just hit yourself in the head a couple of times first.
I get that, but
so after phase one has been accomplished, then what you want to do is you type in KTA USDT and a / and then the asset that you want to price it in.
All right, and then in BTC.
Yeah, BTC USDT after that. So KTA USDT / BTC USDT. And what you're going to see is a chart that goes straight down and to the right. That's what you're going to see.
All right,
Met points proportional to their locked MET. These act as a consumable currency, securing priority presales and exclusive airdrop pools. This absorbs circulating token supply. Meanwhile, the protocol uses its substantial operational revenues to execute aggressive open market token buybacks. However, they execute a strictly buyback and hold strategy, maintaining the repurchased MET in a public treasury wallet to preserve capital optionality rather than permanently destroying it. The MET token derives its valuation from this loop. Its yield is mathematically coupled to the actual real-world cash flow generated by Solana's trading velocity. This structural matrix compares Meteora against primary Solana competitors, Radium and Orca. While the competitors maintain larger overall liquidity bases, Meteora operates with a highly competitive capital efficiency ratio, driven directly by its discrete bins and dynamic fee capture. But while the DLMM architecture heavily outcompetes raw static capital, it harbors a massive systemic vulnerability. The protocol's earnings are derived entirely from dynamic swap fees on trading volume. If Solana's overall network velocity slows down, the fee generation of the discrete bins vanishes, the yield distributed to stakers evaporates, and the protocol's highly leveraged economic engine will rapidly compress. Beyond the math, the platform faces an institutional barrier. The unresolved federal litigation surrounding former co-founder Ben Chow remains a major structural overhang, severely dampening large...
Ben Chow? Is that, did he make the company Puppy Chow? Is that Ben Chow, Puppy Chow?
...scale institutional interest. Meteora re-engineered decentralized liquidity by optimizing for speed over scale. Holding its token requires accepting a highly leveraged structural bet that the high-frequency trading velocity of the Solana network will never slow down.
Yeah, and I mean, that is a significant risk to take. Let's take a look at the protocol itself, because, I happen to like Meteora. It's a little bit more complicated to learn how to use than, maybe a more simple liquidity provision decentralized exchange on Solana like Orca or Radium. Those are a little bit easier to use than Meteora, I would say. And TVL, take a look at that TVL. So this is what, I'm pretty sure this is the Trump coin. I'm pretty sure, because it was like right before he assumed office. That was such a scam. Such a fucking scam, that Trump coin.
Yeah, it was.
And so this jump in TVL is because the Trump team launched the liquidity pool for Trump Sol and Trump USDC. I think it was Trump Sol. They launched it on Meteora. So whoever was on their team, launching this thing knew what he was doing for sure. Because Meteor is the place to go when you want to successfully initiate a pool on Solana. So $298 million TVL. Let's take a look at the website for this thing. Okay, so just waiting for it to load. Update the plan to also deploy the updates to production and merge to main when the updates are complete. Okay, so back to Meteora. They've definitely changed the way that this UI UX looks to me. So if I take a look on over here at, maybe let's just look at top performers. So how do they measure performance here? It says using a combination of historical fees, trading volume, price performance, and other key market metrics. Alrighty, well, if we got 100K in volume over what period of time? It looks like this is over 2 hours. Okay, 100K in volume. I'm assuming that if the time frame is 2 hours, that let me just zoom into 5 minutes. It should change the volume significantly. Okay, it did. So let's just take a look over a 1 hour time frame. Okay, so if we're sorting by top performers, if you got 75K in volume over 1 hour, which has generated $2,500 in fees on a 100K pool, this thing is a parenting. So yeah, that's pretty interesting, man. The fee percent is 4. So that the fee tier is 4%. So what does it mean when it says lock 100? Let's take a look at this. USOH. What is USOH? I don't know what USOH is.
That's going to be a big question that needs to be asked before entering into this.
Yeah, no kidding. Is this V2 or V3? It looks like this is V2. So this is V2, and the fee tier is 4%. Wow. So this must be some type of meme coin. It says low organic activity, new listing, and not verified. So, but this is the type, you see, here's the thing. Liquidity provision on these types of coins, as long as you manage your risk properly, this can actually work. So, like, it looks like this is a brand new launch, brand new meme coin launch. This is about the only thing that Solana is actually good for. It's like, these meme coins.
So the USOH is a meme coin?
It's got to be. It's got to be.
Let me look it up.
Yeah. So, I'm looking at the chart. So this is the chart for the pool, which may not be the chart for all of the activity for the coin. But I would go to Dex Screener to find it. And over here on Dex Screener, let's see here. What we're going to do is we're going to hit build. Okay. I am a human. Verify I'm human. And in the search bar, USOH. So we're looking for United States oil holdings. Oh, this is a scam. I'm pretty sure this is because I saw this. It might not be a scam, actually. $5 million in FDV. Okay, but the FDV could be complete bullshit. Liquidity, 102K. So I saw someone pushing something like I've seen scam accounts.
USOR is a Solana meme token.
So USOH, here's the coin. I found it. It's right here. So USOH. But the thing is, though, is that I recall seeing accounts on X pushing this within the last couple of months, and it was a complete scam. So, but there's a bunch of things that I see here that are telling me that maybe this one's not a scam. Number one, the liquidity is locked. So a significant portion of the liquidity is locked and burned. So almost 80%, but that still means 20% is unlocked. They could totally dump that 20% and take it to zero. So, and then you take a look at the pool on Meteora. Here's the pool. And Meteora says 100% permanently locked, which means that of this 100K, whatever was initialized is locked, but there could be additional LP tokens that are not locked. So this is a V2 pool, and it looks like it's doing, several percent per day. So what you could do with something like this is you could test it with $10 because Solana is super cheap. The gas is super cheap, and but the fees to enter, yeah, man, it wouldn't make sense to use $10. But you could definitely test something like this. Pools like this make a lot of sense for very short periods of time. I'm talking about like 30 minutes or an hour, something like that. And the reason why they make sense is if the fees are crazy stupid high, the volumes are crazy stupid high, that means the fees are going to be through the roof. And as long as you manage your risk by doing, a small amount of capital, and you limit the amount of time that you're in the pool, and once you hit that timer, you exit no matter what, then this could actually work really, really well. And this is the type of thing that I'm going to build into Runway, like a liquidity provider agent. I'll probably do Solana dexes like, Orca, Meteora, Radium. I'll do Uniswap and Aerodrome. And that's it. Maybe Pancake Swap if I'm feeling spicy, just because, BNB chain, there's sometimes some interesting stuff over there. But like as far as liquidity provision dexes go, you're looking at those 6: Uniswap, Aerodrome, Orca, Radium, Meteora, Pancake Swap. That's basically it. So now that we've learned a little bit about Meteora, this is a V2 pool, by the way. If I click on pools up top, you've got DLMM. We could take a look at the so-called V3. You can see the bin step. I'm pretty sure what bin step means. You could compare this to not fee tier, but tick spacing for a Uniswap pool. So this is a Uniswap is CLMM, and this Meteora is DLMM. So on Meteora, they use bins. On Uniswap, they use ticks. So tick spacing would be equivalent to bin step on Meteora. And so this is just, DLMM is more efficient. So you can generate more fees with the same amount of TVL and same volume at the same fee tier on DLMM compared to CLMM. So if I'm taking a look at this, what would I be looking for? Well, probably pretty small bin steps and, pretty low TVL and pretty high volume. So the lowest TVL pools, something like 56K with a ton of volume, this might work. But you see fee to TVL, that's probably the most important metric. So if you've got 3.2 million on a bin step, a 4 with fee tier 0.04, and it's doing 0.39%, that's what you want to be in, the highest fee to TVL. That's the one that's going to perform best. And with Solana, trying to tell people, don't buy me today. You'll be
not yet.
Not yet. You'll be shit out of luck if you buy me today. This is pretty easy to use. You've got spot, you've got curve, you've got bid ask. So what does this mean? Well, your strategy, how do you want to allocate your liquidity across all bins within the range that you're setting? So if you use spot, then you're going to have an equal amount of liquidity spread across all bins within your range. If you select curve, then you're going to be allocating the majority of your liquidity to the current active bin, and then it forms a curve like just a normal distribution curve. So you've got the majority of your liquidity at the active bin, and then it fades to the wings of your range. Bid ask is the exact inverse of that. You have the least amount of liquidity at the active bin, and then as you get closer to the wings of your range, you have more liquidity. So this bid ask is probably a good idea simply because as price gets to the wings of your range, that is where, especially when you're paired with a stable coin, when it gets to the downside bins of your range, your gamma explodes, almost like pin risk if you're trading options close to expiration. So basically, if you use the bid-ask spread strategy and you're trading, a Sol USDC, then you would want to generate more fees at the bottom of your range if possible to help you offset your gamma. That's your impermanent loss. So this bid-ask strategy might actually work really, really well. But what you would probably want even more than bid-ask is you would want to almost skew where you provide liquidity within your bin range to the bottom half of your range. And really, you would want it to increase the lower that it gets within your range, because that would help to offset the gamma that you're going to face, which is your impermanent loss. So, yeah, Meteora is awesome. I really like Meteora. I think it's the best liquidity provision DEX on Solana. And, let's take a look at that staking. Let's take a look at their unregistered security. How do we find that? So I go to more, Meteora, audits, legacy, investor, learn more about MET, blog, launch, get started. Where the hell is their staking thing? They've got to have a staking module somewhere here, right? If I go to, okay, so that's all right, so I'm not looking for that. I want to stake MET. How do I stake MET? Because learn about MET, how do I stake it? You see, the problem with these things is if the UI is so stupid that you can't even figure out, where to do these things, then, what the hell, man? I want to stake this stuff. So how do I stake MET? Create. This is just going to allow you to initiate a new pool, discover pools, portfolio, create more, but I don't see a staking module. Maybe it wants me to connect a wallet, but I'm not going to do that. All right. Well, I can't even explore their staking module. So that sucks. All right, let's go ahead and bring it back to our Intel library. And
checking really quick to see if there's connecting your Solana wallet. You'll need a wallet. It says you have to connect. To stake your MET tokens, you should use the official Meteora protocol website. Staking involves connecting your Solana wallet, navigating to the staking/governance section. So that it's a portal, and then staking your tokens. You lock your MET tokens within the protocol to participate in governance and potentially earn a share of platform fees or other incentives.
All right. Well, maybe another time. Yeah. So let's take a look at Pendle. Pendle. How is oh, dude, no, they got rid of that. They got smart and they got rid of that and exchanged it for S Pendle. So here's
the thing Arrow's doing.
Yeah,
Arrow went from VE Arrow and it's going to S Arrow.
Good,
dude. This is a very good point. A lot of these protocols and chains, they're starting to adopt a lot of the same terminology. They're starting to adopt a lot of the same tokenomics and mechanics. It's pay really close attention to how these different projects evolve. It's gonna play a huge part in their longevity.
Well, because they're learning what works and what doesn't work.
Yeah.
So yeah, this is great. Let's so this is Pendle's staking module here, and let's see here. Then you got Boros. You can read. So your VE Pendle, if you've got those VE Pendle locks, you can redeem those for S Pendle here. Okay, and then this is the Pendle protocol itself. Oh, dude, look at that APXUSD APY, man. Oh my God, people are.
The other day.
people are losing their minds on this stretch token or stretch product. And this
Well, I mean,
is
that you looking at that is what I actually went and bought some STRC, just a couple $100, just to, take advantage, because if it recovers back to that $100, that's what, like 18-19% or something like that, right off the top, and then it's earning 12% APR.
Oh my God, look at Rise, Mike. Rise is getting a rise. Oh my God. Plus,
dude,
yeah.
Yeah,
plus 60% today, man. Oh my goodness.
We just did our Rise deep dive.
Oh yeah, dude. RiseNet. This thing is ripping. Wow. Might have to. I probably can't trade it on Hyperliquid, but looks interesting. So with Bitcoin down,
I'm noticing a pattern. It's when we do deep dives on things, both positive and negative, it usually is a precursor to to something happening.
Dude, look at MicroStrategy.
We did Aave 2 weeks before the exploit. We did Zcash the day before it dumped. And there's a couple of projects that we've done deep dives on, and not to say that us doing deep dives is but that we're choosing interesting projects that either have some very some issues that need to be addressed, or good solid projects with good solid tokenomics that are addressing real pain points, and doing good things as far as building out kind of the future financial system.
So but I agree. We've had a pretty good track record with doing deep dives on things right before they make a big move in one direction or the other, and usually we're on the right side of that too. So speaking of being on the right side, take a look at gold and silver dumping. And I'm going to open some trades in gold and silver on Hyperliquid through Runway today, too. I already entered a trade in crude oil. I think it's going to fill this gap down here at $68 to $68. But take a look at Stretch, putting in fresh all-time lows.
Oh, dude.
Yeah, so Stretch today.
What's it at right now? 70.
Well, it traded 79.85. It's sitting at 80.44. MSTR is down 11% today, trading 92.70.
So I bought it 85. Is what I bought at.
Okay. Look, I just don't see how this thing blows up and goes to zero. I don't think that that's going to happen. And if anything, I think that this is an opportunity to buy, really.
Well, that's why I bought a couple $100 of that STRC, because like I said, if it just recovers to that $100, where it likes to gravitate towards.
$100?
$100 make you holla.
$100?
$100 make you holla.
Yeah, I mean, and even with the Nasdaq down, 0.9% and the S&P 0.3%, this is starting to look like maybe we get a little bit more correction out of the S&P and the Nasdaq here. And with Bitcoin at 59, it is very close to breaking down and putting in some fresh lows. The low to watch is 59,131. Get below that, and the next stop is 50K for BTC. So, Ethereum here, man. I've got to think that $1,000 is in the cards for ETH, dude. Fucking A. You got those retards in the Ethereum Foundation talking about like furries and shit in their manifesto, and basically firing anyone who doesn't want to go along with it, and saying like, we don't care about number go up. Like, that's not good, dude. So Solana down 6%. Solana's got the furthest left to fall. Solana and Ethereum have quite a bit further to fall. So does BNB. BNB, this is a great short. Now that it broke down below the lows from the beginning of this month at 556.45. Now that BNB is trading 552 and change, I think the next stop for BNB is $400. So we're going to get some really great buying opportunities here pretty soon. All right, let's bring it back on over to the Node.pro Intel library, and let's learn about Pendle. Pendle. Here we go. Pendle. And we're going to
In
play.
late 2025, the decentralized yield trading sector faced a massive contraction. As major liquid restaking points campaigns concluded, the mercenary capital bloating the ecosystem vanished. Pendle Finance absorbed a direct hit from this exodus. Its total value locked, which swelled to a peak of $13.4 billion, normalized sharply as speculative capital exited the protocol. This chart tracks the decline. By Q1 2026, Pendle's TVL dropped from $4.93 billion to just below $1 billion by June. But overlaying notional trading volume reveals an anomaly. While TVL collapses, volume holds strong, stabilizing at $1.6 billion. This sustained ratio of trading volume against a shrinking pool of assets shows capital velocity survived. The assets left inside Pendle were actually moving. This resilience was the result of a deliberate reconstruction, shifting the protocol's primary use case away from passive yield looping toward active structural utility. Pendle achieved this by executing a survival strategy across three distinct fronts: diversifying its operations, redesigning its core tokenomics, and ruthlessly managing its reward emissions. To understand how they stabilized the system, we have to look at exactly how they abandoned the industry-standard V-token model for a programmatic buyback engine. Moving away from stripping spot crypto yields and building out institutional margin-based derivatives became an existential requirement to keep the protocol alive. Pendle's first move was deploying the Boros platform to tap into the $200 billion perpetual futures funding rate market.
Yeah, so Boros is brilliant. I love Boros. I got to build Boros into Runway along with Pendle, because Pendle itself is for crypto bonds. That's what Pendle is. These are crypto bonds. Now, Boros is the interest rate swap market, which allows you to hedge funding rates on perpetual futures, centralized exchanges and decentralized exchanges. So think Hyperliquid, Binance, OKX, stuff like that. But this is a brilliant protocol, probably one of the most useful primitives in crypto and DeFi. And I mean, let's learn about the tokenomics, though, for the Pendle token.
Instead of stripping the yield off spot-held assets, Boros takes the volatile floating funding rates from exchanges like Binance and Hyperliquid and standardizes them into tradable assets called yield units. This flowchart illustrates the underlying architecture. Data flows for the underlying perpetual funding oracle into the Boros margin engine, which splits the rate exposure into two distinct positions. On the left is the long yield unit. Here, a trader can use an implied fixed rate to receive the floating funding yield. They turn a profit if the realized funding rate exceeds the fixed rate they locked in. On the right is the short yield unit. This enables a delta-neutral cash and carry strategy where the trader receives the implied fixed rate by paying the floating yield, effectively hedging their exposure.
Right. So you see this? You can pay fixed, receive floating, or pay floating, receive fixed, depending on the funding rate regime of the market that you're trading and the direction that you're trading. So this allows you to hedge your funding rate risk on a perpetual futures exchange.
By standardizing these rates, traders can execute cross-exchange spread captures, pairing a long position on Binance with a short position on Hyperliquid to lock in the difference as a fixed yield. By establishing this order book and margin engine, Boros decoupled Pendle's fee generation from traditional crypto yield cycles, replacing passive deposits with volume-driven trading utility. Pendle's secondary survival pillar relied on capturing institutional spot capital. They expanded into real-world assets, integrating tokenized treasuries like the Paxos-issued global dollar. Institutions and yield allocators purchased principal tokens, specifically PTUSDG, at a discount. This allowed them to lock in a fixed return, redeemable one-to-one at maturity, functioning exactly like a stripped treasury bond.
Right. So this is the core of what a PT is. So a PT strips yield from an underlying asset using something called an SY wrapper. Well, really, what the SY wrapper does is it is the primitive that strips the yield from the underlying to create the PT, the zero coupon bond, and the YT, the yield token that allows you to speculate on that yield of the underlying until maturity. So your PT is the underlying stripped of its yield, which means that if you've got an asset, the underlying is trading at $1, let's say, and you strip the yield from it, now you can buy that PT for less than $1. So because you can buy $1 for less than $1, that allows you to generate fixed yield until maturity. So if you buy $1 for 95 cents and you hold that to maturity, you earn that coupon. And then you can redeem for the underlying at maturity or roll into a different expiration cycle or different asset entirely. So that's the core of Pendle V2.
But while the product itself was attracting heavy institutional inflows, Pendle's legacy tokenomics, the V-Pendle system, were actively discouraging these large players from participating in protocol governance. The first major friction point was capital efficiency. Maximizing yield required locking Pendle tokens for up to 2 years in a non-transferable contract, preventing that capital from being deployed as collateral elsewhere in DeFi. The second point of failure was the manual vote-to-earn system. Users had to actively manage their votes every week, concentrating the rewards into the hands of a small group of highly active, sophisticated users. This chart visualizes the outcome of those mechanics. Only 20% of the circulating Pendle supply was actually locked in the system. Furthermore, manual voting led to highly inefficient emissions, leaving over 60% of individual pools entirely unprofitable. Liquid institutional buyers refused to accept this structural discount and multi-year illiquidity. To retain this tier of capital, Pendle had to completely scrap the V-token model. In January 2026, the protocol introduced S-Pendle, a liquid staking governance framework that entirely eliminated the multi-year lockup requirements. Instead of a rigid lock, S-Pendle implements a 2-tier exit path. Users can unstake for free through a 14-day cooling-off period, or exit immediately by paying a 5% fee, which routes straight back to the protocol. The core innovation of this upgrade is mapped out in this fee generation architecture. Pendle abandoned the fragmented, pool-specific fee distribution system and replaced it with a single programmatic pipeline capturing yield token yields, principal token swap fees, and borrows margin fees. As the diagram shows, 80% of all those generated protocol fees are now programmatically routed directly into a centralized buyback engine. Every 2 weeks, the buyback contract harvests these accumulated fees and executes automated market purchases of Pendle. It uses a 1-hourly time-weighted average price to minimize market impact while generating consistent volume. The purchased Pendle is then minted directly as S-Pendle and distributed pro rata to all active stakers. Simultaneously, manual voting was replaced by an algorithmic emission model. This system automatically allocates weekly rewards using quantitative metrics, enforcing a strict cap of $2,000 per week on combined TVL and fee incentives for any single pool.
Okay, so that's quite a bit different, I'm sure, than what Aerodrome's going to do. Because I've got to believe that because Coinbase has, that massive amount of Aero tokens that they've locked, and it seems like Coinbase probably wants to be able to direct, where Aero emissions go, or at least, their portion of it. I have a hard time seeing, the new Aerodrome model capping incentives or emissions on a pool. So this allocation cap is probably not going to happen for the new Aerodrome protocol.
There are some things that I have read that there are going to be some measures in place that, like the more say, like they're 20 million or whatever of VE Aero, the voting power becomes less the more that they, like if they try to put it all into one pool or 2 pools, the more that a single lock puts into one, the less voting power they get.
Oh, that makes sense.
So basically, you're not going to get a bunch of whales just deciding where all the liquidity goes.
Okay. Well, I guess that's good and bad, but yeah, I can see that. I can see that.
Well, and we
TVL
should see in the next couple of days, because supposedly on the 26th there's going to be a data dump on some details on the new Arrow platform.
Awesome. So 2 days from now.
Yeah.
Friday.
Yep.
Sweet.
and fee incentives for any single pool. This dual architecture creates constant programmatic buy pressure that scales directly with global protocol performance. It aligns institutional stakers with the entire ecosystem's revenue without ever forcing them to lock their capital. However, while these structural upgrades are impressive, they do not inherently protect the entire protocol from sudden macroeconomic deleveraging. Pendle's ecosystem remains exposed to TVL hyperreflexivity. During bull markets, this creates a recursive leverage loop. Users deposit principal tokens as collateral on platforms like Aave, borrow stablecoins against them, swap back into more yield assets, and redeposit.
So, Mike, this is the levered loop that I was walking you through the other day. This is what they're describing, exactly that.
This feedback loop balances PT SUSD yields.
Yeah, so that was back when SUSD was paying, 10+%. Now I think it's, paying just barely above the borrow rate, maybe.
Against Aave borrowing costs. In late 2025, that balance broke.
Yeah, see?
SUSD yields compressed from 12 to 4.7%, while borrow rates stuck at 7%.
So what that means is anyone who's running this loop has to unwind. You can't stay in this.
Resulting in a negative net carry. This mismatch forced traders to rapidly unwind their leveraged positions. Within months, PT SUS deposits plummeted from over $2.8 billion down to just $186 million. Compounding this is a secondary vulnerability in the real-world asset markets. Institutional liquidity relies heavily on centralized banking custodians and is highly concentrated across a small number of large whale wallets. Pendle optimized its internal tokenomics with the S-Pendle upgrade, but its protocol fee velocity remains strictly at the mercy of macroeconomic leverage cycles and third-party smart contract risks. Today, Pendle operates as a fully reconstructed, multi-engine value capture protocol that successfully absorbed the shock of the industry's great TVL contraction. Long-term survival depends on scaling borrows. Capturing just 1% of total perpetual open interest would permanently offset the volatility of spot yield markets. By dismantling the inefficient V-token model and prioritizing liquid capital, Pendle has established a framework that allows institutional participation to scale alongside protocol revenue.
I think that Pendle and Boros are in a phenomenal position to be able to scale and capture more market share. So
yeah,
I think that this is definitely one of my favorite protocols out there. Crypto bonds and interest rate swaps.
Very unique. Definitely very unique.
Yeah, necessary too. This is something that the market needs this. But if we take a look at the Pendle token down 10% today, let me just go ahead and draw in a level of trend line support so that we can see if that's broken or not. Not quite yet. So it's basically sitting at trend line support. And check this out. Got rejected at the 200-day moving average twice, sitting at support. Now, if this fails, I mean, dude, 97 cents is the next is the target on the downside. So this is actually an interesting short setup. If it fails, if support fails, then I think it runs to 97 cents. But Bitcoin is off 5.5% on the session, and the S&P is just kind of treading water. So I think a lot hinges on Micron this afternoon, because if Micron comes out and says anything that is not like super uber bullish, where they're like, hey, yeah, so guess what, guys? Everyone in the world is going to be buying our chips forever. If they don't say something along those lines, then this is an island reversal. This is bearish as hell. So at a top two, So this candle up here, that, where it's got gaps on both sides, that's called an island. And the fact that it gapped up and then gapped down, that makes this an island reversal candle, very bearish at a high, I think at an all-time high. So if we zoom out to a monthly, this pattern is starting to look a little bit more bearish to me. And all it's got to do, Micron, is close the month below $1,000, and that makes this a big topping candle on the monthly. If we zoom in from the monthly to the weekly, big bearish engulfing candle. So a lot is riding on this earnings report this afternoon, Mike. But yeah, man, you want to go ahead and close it out with the socials?
Absolutely. So if you are interested in any of our offerings, so if you want to follow us on YouTube, it is the most powerful way that you can help the channel grow. As far as, liking the different shows that we go live with, subscribing, of course, and then sharing. If you think that the information that we put out is valuable, please, feel free to share that on your social media, because that is by far the most powerful way to help us grow, is just by subscribing and liking and sharing. But if you want to take advantage of all of the what I think is freaking invaluable education that we have on the Node.pro, our official website, you can come here and you can go through our structured DeFi University, where you can learn. It's from beginner all the way to advanced. You can learn about Bitcoin, building on Bitcoin. You can learn about DeFi, how to use wallets, the traditional finance system, basically an all-encompassing education. And it's videos like that you've watched us do with the deep dives. There's reading materials. There's podcast format, so it's just the audio. So if you're driving, you can listen to it, or if you're working, you can listen to it in the background. A lot of different ways that you can use, and then of course the quizzes and the tests to make sure that you absorb the information. On top of that, again at no cost, because DeFi University is no cost. Other people out there that have these education programs, they charge thousands, if not tens of thousands of dollars for. We give it away. Our Intel library. This is all the deep dives that we have done, over the past month or two. We're doing 2 a day, Monday through Friday. And this is deep dive research. Inevitably, we're going to get some things wrong from time to time. By all means, we welcome you to message us in our Discord, message us, wherever on X, wherever you'd like, and let us know if we got something wrong. And if you could do us the service of giving us a link to the official documentation, or cite your source that shows that we are wrong. If you do that, we will change what we're saying about about that aspect of these projects. We are just doing our best to give the information as it sits currently, not speculative, not there might be a vote and the tokenomics are going to change. The way it is right now, the way the tokenomics are right now. Does the token have value capture? Is the protocol or chain earning fees or revenue? These are the questions you need to ask yourself. No matter how sexy the tech is, no matter how many partners they have, no matter how much fees and revenue it's generating, if there is no connection from that to the token, because the token, like Ondo, is just a voting token, it's just a governance token, it doesn't matter how successful Ondo Finance is, other than speculation. There's nothing that makes price go up, other than people just seeing bullish news and buying the token. That's the majority of crypto. It's pure speculative buying and selling. That's why we see the volatility we do. All right, so AI newsletter, David is continuing to dial that in, but you can use it at no cost. You can do a preview, and there's still a lot of really good information that it gives, and it cites its sources. We practice what we preach. You can click on the links, and it will allow you to go to the news articles. It will allow you to go to the documentation. It will allow you to go to the charts, and see exactly what it is, how it came to that conclusion. So trust and verify. Community. If you want to join our community, again, no cost. Our Discord. Go in here, join the Discord. Great community. We have over 500 people in there now. Scotty D is in there. I'm in there. David's in there. Jeff's in there, and a bunch of other people from our community. We're more than happy to answer questions for you, no matter who you think it is. Do not ever give anybody access to your wallet or any personal information. We do a really good job of keeping scammers out, but they do still make it in from time to time. And if you see any scammers, please report them to me. I will get them out of there quick and in a hurry. There is a premium channel in the Discord. So that one single channel, if you want to sign up, and again, there is a no-cost trial. You can join 3 of those premium calls at no cost, no obligation. And and that is on Monday, Wednesday, and Friday with David and the rest of the community that pays for that service. And they go over lessons. And then it's an open forum where people share advanced strategies that they're doing. Some of them they're making good money. Some of them they lost money. But it is a great place to if you're thinking about getting into a position, maybe asking a group of your peers and David, hey, I'm thinking about doing this this arbitrage play or this looping strategy. What do you think of this? And together, live on the call, on the video call, you can they can hash it out and say, hey, you know what, this looks like it might be a good play, or you know what, that looks like dog shit. I wouldn't do that. It's a nice, it's a nice a nice thing to be able to do. The store, if you want to support the store, or excuse me, the channel. This is just something that, other than getting a t-shirt, a hat, or a hoodie, it's just a way that you can, help support the channel. And we greatly appreciate it. We're definitely trying to grow the channel. Again, the most powerful way that you can do that is just, subscribing and sharing the stream. But if you see a design in here that you like, we greatly appreciate the support. Like I said, learning under the More tab, beginner, immediate, and advanced, and it takes you through, and step by step, each lesson builds on the last, and you can, at no cost, again, you can develop your DeFi education, your crypto education. Programming. This is all of our shows, so you can see. Each day we have multiple live shows. Some days we have 4 or 5 live shows. So there's something for everybody. Everything from crypto and traditional finance, to community calls, to evening shows. Tonight I'm going to be gaming. I actually found a new game called Sand that just launched, and you have these big mechanical spiders that that you're on top of. And you steer them and stuff, and you basically go around and loot stuff and blow up other mechanical spiders, people on their mechanical spiders, and it kind of looks cool. It's kind of like a post-apocalyptic game. The spiders, it's like a platform, and you got artillery guns on them, and it's pretty cool. But
sweet, let's do it.
If you want to join me on that one, or if you end up joining me, and want to do the tank one, we can do that too.
No, let's do Sand.
All right. Yeah, so download Sand on it's on Steam. So download Sand on Steam, and we'll play that tonight. I haven't played it yet, so it should be a fun one. And and then we have music. So we have a music channel where David has been posting AI music. Jeff has his DJ show on Saturday Night Fever, where he does interviews with other DJs in the San Francisco Bay Area. They do tutorials. They spin records and do all their mixing stuff. Not something I'm super familiar with, but great place to hang out and kind of learn about that kind of thing if it's something that you're interested in. And then my solo show, Sovereign Soil, where I share my experience of 22 years in the military, decades of experience as an emergency prep. And then I've been a homesteader for over a decade now, since I built my cabin. So if you're interested in that kind of stuff, I talk about guns, I talk about marksmanship, I talk about go bags, and me and David are going to be doing this Saturday probably be doing a go bag episode. David,
let's do it this Saturday. I wanted to do it last Saturday. I know you were busy. Let's do it this Saturday.
Yeah, let's do it this Saturday for sure. So we'll be doing a go bag episode of me helping David put together a go bag based off of his lifestyle, his location, all of those different aspects, rural, urban. He's kind of a nomad, so it's something that he's going to need to be able to carry with him, wherever he goes, things like that. So anyway, yeah, we'll get into
I'm
that.
also thinking it's hurricane season. So, what type of, stuff do I need in the go bag for that,
Water purification is going to be a big one. So, but that's all I got. So we appreciate y'all tuning in. If you could on the way out, just like I said, it costs nothing. Hit that like down at the bottom, subscribe, and if you could share it out so that we can get this good information out to people. And we appreciate you, and we'll see you on the blockchain report going on right now. And later on today, David will be doing the market wrap. And if you want to, try that live call out. And tonight we'll be gaming. So there's still plenty of valuable content the rest of today. Until next time, Veteran Crypto out.
Peace.